Hi there, a very good morning and good afternoon to all of you, and a very happy new year to all of you. And welcome to this live session with me. And I welcome you all on this first live session of 2023. There was some technical glitches, and that's why I'm live late. So I'm live about 45 minutes late. Apologies for that. So today, I'll talk about three learnings from the last year, from 2023, that I want to discuss with you all. And plus, I'll answer your queries as well. So, I hope your New Year Eve was pretty good and you have been enjoying holidays at the moment, and you all will go back to work pretty soon. Uh, in that meanwhile, you would be thinking as to how the investment you can say move would turn out over the next 1 year or so. So let's understand about the markets first, and then we'll discuss about everything about these three learnings that I want to talk to you about. So the markets at the moment is around 18,000, 18,200, and the markets, so it made a high at 18,800 and declined after that by about 700-800 points. So at the moment, with the kind of earnings that in FY24 that we all expect around 950, 960 rupees, the market isn't trading at very expensive levels. So in that regard, I feel that the market may go down by about 500-600 points from here to around 17,400, 17,500. But I think overall we'll see a pretty good move towards 19,000, 19,500 going forward. So that's about the markets. In fact, the mid cap and small cap indices have not performed that well. And so over a period of time, I think in this year, that is 2023, I think mid cap and small cap should end up performing reasonably well, reasonably decently. So in my opinion, I have a feeling that if somebody stay invested, if somebody keep on their investments in their mid cap stocks, I think the performance should be fine over the next 1 year, because mid and small cap companies have not performed that well. So in terms of the markets, I don't see a major crash happening unless something external happens which causes the market to fall big time. Otherwise, I feel that the markets should end up performing pretty reasonably going forward over a period of time, over the next 1 year or so. Now let's talk about the three learnings I wanted to talk to you about. Three aspects where the markets have taught me a lesson, and then it's always a learning curve that one needs to understand. So the number one point that comes to my mind is that midway through the year, or just about in the fourth or fifth month of the year, April, May, I invested into, you can say, real estate and some of the real estate stocks. Those did not perform. The performance of those stocks were not that great. And to tell you frankly, I'm not a very big real estate expert or for that industry. So what I have learned from that experience is that you have to stick with your, you can say, best sectors and invest into stocks which have the best sectors. So I believe that if you are comfortable buying into IT, pharma, or even real estate, whatever you're comfortable buying into, whatever stocks you're able to analyze, you're able to do well, you should be able to, I mean, invest into those, and you should look to invest into those even in downturns if you can find some companies. Otherwise, don't get into companies or stocks or sectors in which you don't have your forte, or in which analyzing those sectors is not your forte. So what happened with me was investing into some of the real estate companies is that it was very difficult to envisage as to how the numbers would pan out. Eventually the numbers did not pan out that well, and made heavy losses in there. So in my opinion, it's better to invest into sectors which are your forte and you're able to probably analyze them, rather than getting into sectors which probably are not going to make you a lot of money if you're not able to analyze, because the numbers could be up and down. For example, metals, etc., I don't understand, so I don't get into them. So that's the first point. The second thing I learned over this 1 year or probably 18 months in the market in the last 18 months, and even earlier then I forgot, and now I've learned it a big time, is that investing into companies in which large investors have invested, uh, one needs to stay away from that. Whether it is any large company, any you can say behemoth, and any big investor, even if it he has got into any of the you can say stocks, he should be means he knows best as to why he's got into the stock, at what price, and when he's going to exit. uh, for me, I mean, investing into companies in which large investors or large deals have taken place, it has not been that fruitful, at least 70-80% of the time. So I believe that if somebody is looking to probably buy into such company, then they have to be very careful. They have to be very sure themselves in order to get into those companies, to buy into those companies. Uh, at the moment, I believe that one needs to analyze companies separately from their investors, etc., as to how the business is and how the businesses would pan out, rather than buying into something in which large investors or large deals have taken place, or fund houses have bought into, so let's buy into it, will perform. That hardly works out. So that's another learning for me, that one needs to probably uh, get into firms in which you're confident about earnings going forward, and then you buy into it according to your acumen, rather than buying into it according to any large investor getting into that stock. So that's the second learning. The third one that I have understood is that even for long term investors, even for investors who buy into companies from a 2, 3, 5, 10 year point of view, one needs to probably have a stop loss, and that has to be for everything. Even if you're buying into a company, a stock, from a 4, 5, 7, 8 year point of view, one needs to keep whatever stop loss according to your risk appetite, whether 20%, 30%, 40%, whatever, so that you don't lose a lot. So in my opinion, if you have got into any firm, uh, you need to probably see, even if you have bought into anything, you have to have a risk appetite in a manner in which your risk get curtailed even if the stock falls. So if you are able to take a risk of say 20%, then you need to probably keep a stop loss at 20%, and even if that gets hit in the first week, you have to exit even if your investment is a long term one. So that's the third and most important learning, is that you don't need to lose a lot of money in order to understand about the market. Keep stop losses in mind, even as a long term investor, so that you can move on and build positions into some other companies and make money from the money that you have been able to probably save. So these are three aspects, or three lessons I learned over this period of the last 12 to 18 months, that one needs to understand. You need to also probably, if you're fine with that, you can write as to what you have learned over this period, as to some of the mistakes you might have done, and eventually you would have learned and came over it. But these three are pretty important aspects of investing, that one needs to be careful about, that one needs to be wary about while getting into the investment horizon in the market. All right, for the next 5, 6 minutes, I'll be ready to answer your queries. Please do, you can say, support me on Patreon. Do use super chat and super sticker. That will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. So some of the queries. First of all, a very happy new year to all of you. Hope your year goes well, and especially with health point of view, you get all the best of the health. That's my call. In 2022, I believe, Vishy, the sector to look for is IT. I think IT have been bruised and battered altogether, and probably from March, April onwards, you'll see the move. Not quite immediately, but March, April, and could be by the fag end. It could be the sector that people would look forward to. That okay, this was something to invest into after the lull in 2022. So that's what I feel. If you have money separate, yes, some of the IT stocks have fallen big time. mid cap IT. So that's something to look at. Sheikh Abdullah, I think Tata Elxsi around 6,000 is a very good buy. I think it's very decent. I mean, reasonable valuations now. Yes, I know that last quarter numbers were not that great, and probably one more quarter of bad numbers could be coming in. But I think around 5,700, 5,500, everything is priced in around there. So any dip towards 6,000, 5,800 is a good buy. As far as whether it will bounce back on or not, it all depends on how the numbers would pan out with respect to FY24, etc. But the company and the pedigree is so good. I think it's going to come back big time over this period. So I think Tata Elxsi is something to be looked at these levels. I think Tata Chemicals, it depends on Buchi Babu whether you have a 6 months time frame or a 2 3 year time frame. In terms of 2 3 year time frame, these are decent levels from here till 850 840 to buy into. From a 6 months time frame, I think it's an avoid. See, all those stocks which are not quite having technical strength at the moment, you should not be bought into from a 6 months point of view. Anything you need to buy from a 6 8 months point of view should have a very strong technical aspects. Technically should look extremely strong, and fundamentally also one should expect 2 3 quarters of good numbers. Otherwise, don't get into companies which have fallen 40 50% and looking very weak on charts. All these companies look extremely good from a 3 year point of view, because these are pedigree companies. For example, all these, say Dixon or anything else, I'm just quoting an example. It's not that these are recommendations, but FL Root, whatever being asked for, I mean, these are very good companies from a 3 to 5 year time frame. But at the moment, they are down because of a reason, and probably in the short run, unless technical charts improve, they don't look as if they're going to perform exceedingly well from a 2 to 3 month uh, point of view. So Gland Pharma, I think pharma at the moment looks difficult to perform unless another pandemic wave comes around. ABB looks good. Yes, I think capital goods could perform, but ABB is a buy on very bad, you can say, market days, or when the market goes to 17,000, whenever it does. Those will be the time to buy into Siemens, ABB, and Reliance of the world. So RVNL is good. RVNL is decent enough, but I think post the rail budget and budget etc., we'll have to see how these perform. So I would say don't buy now. The move has already taken place. Wait for major declines to buy into. Again, long term, whichever stocks I talk about at the moment, I'm talking about from a long term point of view. So real estate, I'm not that positive or gung ho about. There's a scare of another wave that could come through. So avoid real estate, even if it means Sobha, etc. Buy into defensives. In defensives, I think consumer stocks are good, and mid cap consumer looks very decent. So that's my call. Index Rubber is a very decent company, very interesting company. But see, whenever you buy into smaller companies or mid cap or very small cap, micro cap companies, you have to have in depth analysis of it. And second thing is that you have to have a decent time frame. So Index Rubber 4 5 year time frame look extremely good. From 6 months, I don't know, because if the market falls big time, if the market doesn't perform at all, then these are the stocks that will be bruised and battered altogether. So somebody did ask about Kilpest as well. I think it's a matter of time, probably a couple of years, 3 years. This stock could perform extremely well. Another stock that is in my portfolio, so that's a disclaimer. But Kilpest from a 4 5 year time frame look extremely good for 2000 2500. Uh, I think 2000 is a reasonable, you can say, expectation from Kilpest from a 4 5 year time frame. Let's see how the next 2 years pan out. I'm very gungo about Kilpest from a 2 year point of view. I don't know about the targets or anything, but numbers should improve dramatically with the acquisition in Europe, and hopefully they'll start selling big time, and sales figures should improve going by how the performance has been in, you can say, the last quarter. So Devyani International on declines can be bought into. I think they're better consumer-oriented food companies or all these companies in this space rather than Devyani International. But valuations are such, and the way it is stretched, it is better to probably get into Devyani on declines also rather than at this point of time immediately. IDFC, see, I don't have any call on that because I don't track many banks, in fact, any bank. So I won't be able to comment on it. Okay, what else? Okay, placement drive is good. The one can look at it on declines, and from plastic blends is a decent company, but again put only 3 to 5% of your total holding into the stock. I think defense should perform on major declining days, something like a BEL, BEML. These companies can be bought into from that point of view. Kumar Priya, Thermax is decent company to get into, but Siemens is much better. But valuations in Siemens is more stretched, so it's a difficult call. What you can do is probably buy into Siemens after a major market decline, say 5 to 7% in Nifty fall, and then mid cap falling something like 10% or so. That is when probably you can buy into something like a Thermax. Okay. See, I'm not very gung ho on the oil sector or Aban, Celan, etc. Get into reasonable sectors, high profit making companies, and make money uh, from a 2 3 year point of view. That's a call. KPIT is a buy at 650, 640, those levels, not at these levels. KPIT is slightly stretched. If you have bought at lower levels, you can probably book profits. But at these levels, I think on declines, it's a buy. Numbers are decent, but valuations are stretched on KPI. All right, guys. Thank you. Thanks a lot for being online. We'll be online again on Thursday with the live session. Hopefully, now videos should start streaming in from Wednesday to Sunday from this year onwards. Thank you.